Good morning. It's always difficult to speak after Jeff because everyone are so overwhelmed and pumped and still digesting all the information. Actually, Jeremy and Jeff did the bigger task to me. Some of the burden they took away because they already spoke a bit about gold, crypto, the differences, a bit of background. So I'm going to consolidate some of the things they said and add few more takes from my side. And the difference between crypto and gold from an investment point of view, so it's a different perspective. Were they similar, were they different, and how do I see it in terms of again, from an investor point of view. So a bit of information. I'm the managing partner of Rotbart & Co. We have offices in Hong Kong and Singapore, and what we do, we help individuals, family offices, and investment firms buy gold, invest in gold, and physical gold, allocated gold easily. So I don't know if Jeff is still here. He said it's difficult to buy gold. Our task is to make it easy for investors to buy gold. We help them through the transportation, the storage, and so on. We do it on a global scale. And what we started doing 2 years ago is helping clients, the same clients actually that are buying bullion from us. They came to us and said, can we buy cryptocurrency? Because we heard about these things, but we don't know how to do it, and all the hacking and all these different things that's happening. So we looked into that, and we opened another company that actually help investors go into the crypto market. So we have a lot of exposure both on the bullion side and both on the crypto market. We try to bring the same, I would say, standard of the bullion industry in terms of safety, security, assurance things are there, things are set in the right place to the bullion industry, to the, crypto industry. So before I start, or as I start, just briefly, what are cryptocurrencies? And I talked 2 days ago here more about the technology behind it and the blockchain. Cryptocurrency is by far the most famous application of blockchain technology. Nobody would know about blockchain technology if it wasn't for cryptocurrencies and for Bitcoin. It's been around since 2008. And basically, they use strong cryptography to secure financial transactions. Through the math Jeremy mentioned, they can limit the amount of coins to be issued, and they can verify transfer of assets, or what he called double spending. Now, 2 notes before I really dig in. One of them, I'm talking about physical gold, fully allocated, whole units, not fractured ownership, not all this stuff. Why? Because I think from an investment point of view, as an investor, you would like to hold physical gold, and you would like to hold it privately away from the banking system. So it's not ETF, not mining shares and so on, physical gold. And on the crypto side, I'm going to talk about Bitcoin and why it's, of course, again, Jeremy mentioned it's the first generation, but Bitcoin by far has the biggest market share in terms of cryptocurrencies. Trade over 50% of the value in the crypto market is Bitcoin. He's trading in Bitcoin. From the millions and millions of transactions we did for our clients and cryptocurrencies, it's always Bitcoin. It's one of the most stable and one of the most known cryptocurrencies. So let's go in more detail. And the question is why we're even talking about gold and crypto in the same sentence. Well, that's why we're all here today. So it's been hype in the financial literature and globally for a couple of years. Are gold crypto or not? Maybe gold is new crypto. You want to have it. Bitcoin is the new gold. Oh wait, Bitcoin is not the new gold. So it's really, if you look at Google and you do will Bitcoin replace gold, there are over 6 million results. If you Google Bitcoin is the new gold, you get 117 million results. So it's a big question. So people want to know again what's the difference and whether the same. And we heard already different. Jeff was kind of like they're not competing, and I agree, but he's obviously more bullish on the crypto side. I'll let you decide at the end of my presentation. So first similarity, as you can see between gold and cryptocurrencies, they are, can be seen as decentralized global currencies. So when you look at that, and both cryptocurrencies, both gold, they don't have a third party that actually issues them or guarantee their value. They're both independent. Gold from being gold and being issued by a good mint, and cryptocurrency because of the nature of the technology. So if you look at the Satoshi white paper from 2008 that actually started Bitcoin, he mentioned Bitcoin as a payment system, as a peer-to-peer payment system to bypass the banks. So one of the reasons people buy gold, one of the reasons people buy cryptocurrencies are in a way to find another solution for transferring currencies globally, and both are recognized globally. So you can actually transfer everywhere. You can go with a gold bar anywhere and cash it. You can wire crypto everywhere. Second, they're private and confidential. So they can be held privately and in a confidential manner. Bitcoin can be stored in on a ledger and then, say, kept in a vault like we do for our clients, or you can put it on an app, or you can put it on the exchange. There are many ways of storing it, but one thing is you don't have, in theory, you don't have your name attached to the account. It's not reported to anyone, to any government. It's not reported to the tax authorities. You can hold it and keep your identity confidential. I'll give one comment shortly about this. Gold is the same way. So if you put a gold in a vault, again in a private vault, this assets, these holdings are not reported necessarily to the government. It's based on jurisdiction, but of course from the vault operator point of view, they're not being reported. They're not part of, I've heard of CRS, Common Reporting Standard. They're not part of the Common Reporting Standard. They're not part of FATCA for American clients. So there's some similarities about that. And again, as I mentioned, the incentive to move to gold after the financial crisis and to move to cryptocurrencies, part of it becomes from people wanting to feel that they still keep some privacy. We had a client made a fortune in commodities trading, and he wanted to move $100 million to physical gold. And I asked the guy, who was from India, and asked him, why do you want to move that? He said, listen, it's just about the safety of my family. Because now, when all the banks report to each other, I have $100 million in a bank account in Singapore, that's being reported to India, that's being reported down to the state government, down to the county. I don't know what's going to happen with my parents. Now that everyone knows I'm super rich. So this kind of mindset that brings people to buy gold and to move to a private vault. We moved a lot of gold in the last 8 years from banks' vault, mainly from Switzerland, to private vaults here in Asia. It's the same thing. Client want access. Our biggest client once wanted to withdraw 1 kilobar from his UBS account in Singapore. It took him 2 weeks because he had to answer all these questions, as Jeff mentioned before. Why do you want it? What will you do with it? Where are you going to take it? And I said, listen, this is mine? Yes, then I want it. No, but why? Tell us why. So we all know this, right? So that's one of the reasons. In terms of one comment I mentioned about confidentiality, and again, Jeremy mentioned it before. Actually, when you buy most cryptocurrencies, we know there's a public key that we know how much in this wallet, but actually, with the right due diligence process, analysis process, we can know where the cryptocurrencies came from, right? So it's not fully, there's a way to find out who owns them or ways to find out where it comes from. And I can tell you honestly, for large transactions, we do it ourselves. If a client comes to us with a large volume of cryptocurrencies, we will analyze them to make sure they're not coming from dark web, drug trading and so on, or trafficking and so on. So there are ways, it's not fully confidential as gold. Both diversify portfolios, right? So we know about gold. It's holding between 5 to 10% of one's portfolio in gold gives a good effect on the portfolio. It keeps it better diversified. It performs well in terms of uncertainties or financial crisis. So it's a diversification for lower volatility and more stability in your portfolio. Cryptocurrency diversify portfolio, but exactly the other end. If you want a volatile, if you're not willing to lose some, because you were complaining about losing on the Ethereum, right? So if you buy cryptocurrency, you need to be willing to know that, it's high volatility. It can go up, it can go down. I bought, I think the last time I bought it was $6,000 or $5,000, but that was back in, it was almost a year ago. So I saw it all going to 20,000. I felt, I'm so rich, it went down. So you need to be willing to take the hit on that. Yeah. But surely both have place, depends on what your purpose is. In terms of differences, as mentioned before, cryptocurrency wins by far in terms of the trading, being able to facilitate trading faster and transfer faster, and easy storage. So again, in theory, you can hold $1 million, $2 million, $5 million, $10 million worth of cryptocurrencies on a ledger. I wouldn't recommend anyone doing it on an exchange or an online app. Do it only on ledgers, on cold storage, what's called. So ledgers, you can put it It's only connected. It's only live when you connect it to a computer. Don't keep it, and the exchanges are bound to be hacked. But you can still do it, and it's inexpensive to store it this way. And as Jeremy mentioned, you can wander around with $10 million worth of cryptocurrencies on a ledger and cross borders and do whatever you want with it. Gold, of course, is a bit more complicated. We can't trade it without moving back to a fiat currency, unless we start paying each other with gold coins or gold nuggets, which is a bit more difficult. And storage, of course, it's a bit more, I would say, a bit more tedious. Although again, in today, it's not that difficult if you find the right. But you need to find a storage service provider that will do it for you. But definitely one win for the crypto. Price appreciation. There's no walk around it. Look at the chart. When you put the Bitcoin, the price of Bitcoin compared to gold, gold seems like totally dead. And look at the crypto. So even though crypto went up like crazy last year, went down, it's still, the price appreciation is there. You can't ignore it. I speak a lot, mostly I speak actually the last 2 years to crypto investors conferences, telling them, trying to educate them about gold. They always laugh at me because like, how much gold did in 2017? I said about 10 to 12%, and they just burst up laughing, right? Like, that's boring, that's nothing. So I think the sentiment in the market now is a bit different because now we saw the up, we saw the down, but still, it appreciates and can appreciate more in terms of the percentage. Where is gold winning? First of all, gold has intrinsic value, and in a world where everyone are trying, and even notice, and you'll notice the speakers earlier and maybe later today, the question on investors' mind on whether cryptos will be there, what's going to happen to crypto? What will happen? You hardly hear it about gold. 2 days ago, we heard one sentiment whether gold will be around, but gold has been around for, I think, even more than 3,000 years, right? It's really part of our culture. If you think of Olympic to Oscars to James Bond, it's all about gold. It's really part of who we are and our civilization. I doubt that it will change very rapidly. And nobody asking what will happen with gold. It have uses, it have a robust demand for jewelry, for technology, for central bank and so on. It's scarce, there's no question. Cryptocurrencies are, by some people, are still doubted and looking for long-term, again, gold wins and on the long-term perspective. It's a stable earner, so you're not going to get rich quick with gold. Right, but it's appreciated in time. The last 20 or 30 years, on average, gold was doing, even when it done, gold was doing about 10% a year appreciation, excluding inflation. If you look at the purchase power of gold, it's still there. It's proven. There's a track record. We can trace it back. Something we can't really do with cryptocurrencies. We don't have that much of a data. And it's low volatile. It's really low volatility. So again, back to what the purpose of the purchase of the cryptocurrency or the gold is. It's low volatility, and actually gold volatility comes handy in turbulence times because then it's doing quite well. Look at the difference in the volatility between Bitcoin, gold, and S&P, and that says everything. So again, depends what you want. Again, from a safety, what we do physical gold. It's safety and security. From a safety and security point of view, I think it speaks for itself. And last win for gold, I think, is that, again, go back to something I mentioned before, it's trusted. It's really something that everyone is familiar with, or many people are familiar with. It's been around. People know about it. Governments usually don't have issues with it. There's some taxes in some countries, so don't try to bring gold to China, because if you bring gold to China, you're never able to take it out of China. Philippines, all these countries, they still tax gold, but it's something that people understand, people know, it's been around. If you look from a banking point of view, for instance, Jeremy, I think, was too optimistic that these problems are being solved. I don't think they're going to be solved that quickly. Some of our clients are ICOs, initial coin offering companies that generate coins, have money, and they come to us to convert it to gold and to park it in the vault for two reasons. One of them is the volatility I mentioned before. They need to be able to pay the developers and the marketing guys in 6 months' time. And they don't know what the coin will be worth in 6 months' time. It can be here, it can be there. And the second is the banking issues. So they raised money, they raised $5 million, $10 million, and now they go to the bank, like the bank, where's this money come from? Oh, we're a nice CEO, we raise money in tokens. Say, thank you, we don't want to do business with you. And I can tell you, frankly, I learned my lesson on the hard way. Even places that are, I would say, welcoming for blockchain technology, like Singapore, cryptocurrency is a big no. If you bank cryptocurrency, if you get a wire from an exchange in Singapore, the bank will call you if it's a small amount, if it's a large amount, and they'll tell you, I learned it on our own flash that we got. We wired $1 million to buy. We sold gold for $1 million and wired and bought Bitcoin for the same amount. Our bank account, 2 days later, we had a courier coming to our Hong Kong office from the bank in Singapore. Thank you for doing business with us. Come and pick up your money in 30 days. See ya. So it's not easy. And actually what we realized, we started our crypto division to help crypto investors move to gold and gold investors move to crypto. But funny enough, after a few months in this field and talking with people, we have more demand from people actually just say, you know what, I got crypto, I need to convert it to just fiat money. Why? Because I still need to pay my rent, I need to pay, I need to pay for education for my kids and so on. But I can get money from an exchange. So can we do it via gold? So actually gold suddenly became a tool to go back to the traditional banking world, right? So that's one of the things we work with real estate operators and international tax advisors that get paid in cryptocurrencies, and they still have problem cashing it and moving it out of the banking system. So I hope it will change, but I'm not sure how fast it will come. The second thing is, and I think on the crypto side, is the regulatory issues. Again, that as mentioned, that is being looked at and will be solved hopefully at some point. But if you look at what happened in the exchanges, in the crypto exchanges, they're not transparent. They're not sure. You don't know whether the price appreciation goes up because there's real trading or because they manipulate the figures for the price to go up. When the price appreciated last year, the word was that the whales, the guys that hold the big holdings of crypto, basically was just trading with each other to raise the value. There's no oversight. There's no regulation. You can pay I would say, independent company to review your product. You'll pay them $10,000. They write a beautiful article on how great is your product. Inside trading, all this stuff. These are very common practices still. So that's again one win for gold. If we look at it on a chart, so we try to put kind of the main virtues on main characteristic of each asset, right? So you can see for yourself, and you can decide for yourself what you want to do with this, right? I can tell you, we come from a very, I would say, independent point of view. We're biased. I mean, of course, I love gold. I come from the bullion industry, but we do cryptocurrency, so that's good for my business. That's good for my business. So it really depends. At the end of the day, if the idea is to provide good sleep at night, I would say gold maybe is a better option for the long term. If the idea is to play around and kind of spice your portfolio, crypto is probably a better option. But I do think there is room for both. I don't agree with many of my peers in the bullion industry that says, yeah, Bitcoin, it's a whole Ponzi scheme and it will never fly and all that. I think it's not the right attitude. Again, I was here 2 days ago it was more tailored to the precious metal guys, telling them, guys, we should adopt it. It's not evil, it's not Ponzi scheme, it's fine. So I don't think it's going anywhere. You just need to know what to do with it, how to do it, and in what context you want to invest in it. One thing, and I think it's going to be discussed later today, is all those gold-backed tokens. And sometimes now people think that we do a gold-backed token because we play on both field of gold and cryptocurrencies. We don't. And gold-backed tokens, and there'll be people here to talk about later, it's a tricky thing to do. It's a tricky thing to do. It's not easy for regulatory issues, for operational issues. And there are about 30 projects now that are trying to do it globally, and we hope maybe today we'll find something that we think can work well. So far, it has been worked very well, but for sure that's something, and I agree with Jeremy said before, that will be where the cryptocurrency industry will go, to be at asset-based tokens, because people at the end of the day, they want real value. They want to be able to appreciate in a rather precise way what's the value of the coin that they have. They want to know the underlying assets. So that definitely is the future of the cryptocurrency industry.